Okay, we are 2:01 Eastern. I think that's time to get going. So, want to thank everyone for coming to our panel discussion, recapping the first quarter deal trends, market conditions, and predictions. We will, of course, touch on the topic that I'm sure is on top of everyone's minds, namely how COVID-19 impacted deal making in the first quarter, but also our thoughts on how things will go into the future. We will be recording this session, and a playback will be available shortly afterwards, at least on the Locust Walk website, but we'll also email everyone who attended a link to the recording in case you have any questions. So as a follow-up to the last webinar, we did 2 weeks ago about the strategic implications of COVID-19 on biopharma. We're going to discuss the impact that COVID-19 has had and will likely continue to have on the deal-making front. We have 1 hour allocated to the panel, including questions that I've prepared in advance, as well as any questions received either in advance or from the questions panel that everyone should see on the right in the webinar. If you have any questions, please submit them on that forum. I will read out the most frequently asked questions and ones that also have the broadest applicability to the audience. I'm also obligated to share that due to confidentiality obligations and other regulatory requirements, we will not address questions specific to any one company. If we don't have time to address your question, we'll follow up separately with our thoughts. So I want to thank the panelists who have joined this discussion to share their views on what they're seeing in the market. And I'll introduce each of you briefly. Then I will do a brief overview of what we saw from our market conditions. Then we'll go to the questions. So starting off, we have Chris Ehrlich, Senior Managing Director and Global Head of Biopharma at Locust Walk. Chris brings significant venture capital, business development, strategy consulting experience prior to joining the firm 7 years ago from Interwest, where he was a general partner. Chris is based in Locust Walk's San Francisco office. Welcome, Chris. We also are privileged to have Barbara Kosacz, who's a partner at Cooley, join us. Cooley, as you might know, is the largest law firm focused on high-growth life science and tech companies and their investors. Barbara is the international head of the firm's life science practice. She serves on Cooley's management committee and is also based, I believe, in their Palo Alto office. Barbara is a good friend of the firm, and among many other things that she does, she sits on Locust Walk's advisory board. So we really appreciate Barbara joining us. So thank you. I will kick us off, as I said, with some brief overview comments from the quarter, and then we'll get to the questions from the panelists. Hopefully everyone had a chance to review the documents that we sent around before. We're not going to be reviewing the data in detail. Rather, we're going to have a discussion around that and the implications. So starting off with the US. Q1 was off to a great start. It was piggybacking off a banner year in 2019 for biopharma as part of its extended run in the capital markets that we've seen over the last, frankly, almost decade. Of course, then COVID-19 shocked the world, and that sent the global capital markets into a tailspin for the balance of March. The decline, of course, was brutal across all sectors and all geographies, and biotech was not spared. However, the silver lining is once the world grasped the situation and realized the critical role that biopharma can, is, and will play in solving the pandemic, the stock started to rebound, especially those with a focus on addressing COVID-19, which interestingly enough has obviously become a large subsector of that universe as people pivot. We will cover that as well. So outside of the systemic meltdown, biopharma deal activity on both the strategic and private financing front continues apace. We'll also talk about IPO activity, which interestingly was flat from the last quarter and about on par with prior first quarters of the year. So while we would have expected a market decline, because COVID only happened in the second half of March, most of those deals were placed ahead of the meltdown. And so we do expect that the IPO option will be somewhat less available to emerging companies in the coming quarter or two, but again, we will get into that in greater depth. Internationally, Europe, as is typical, paralleled the US activity with the reduction in deal making. In Japan, with the limited public market for biotechs, also suffered as well. Interestingly, though, China, the first to experience COVID-19, seemed the most resilient, with both public and private financing markets and the strategic deal-making market performing fairly well. We were privileged actually at Locust Walk to even close private financing in the second half of March actually, but it was led by Asian investors. So we can definitely comment on our views on how Asia is and will continue to perform. So some specific observations relative to the financing market. I thought it was particularly interesting that private financings in Q1 increased in number and value, a pretty remarkable feat from the prior quarter. And a lot of people want to know, well, why is that? And I think, Chris will get into this, as will Barbara, but, pools of private capital are usually less sensitive to the fluctuating public markets, but certain investors have different sensitivities compared to others. And also the timelines for doing private deals are measured clearly in months, not weeks or days like public markets. And so lots of these investors have been looking at these deals long before the COVID situation took hold. And so we'll talk about the implications of your deal that's potentially in process. Public financings, as we discussed, were pretty robust. There were actually a fair number of large IPOs completed in the first quarter, led to a large amount of capital actually being raised and flat on a numbers basis from the prior quarter. All of that, except for one, was prior to the pandemic hitting. The class of 2019, IPO class 2019, was actually very well performing. They had some good price increases throughout the year, and those stocks ended up holding up reasonably well in the first part of 2020 as well. I would say even the IPOs that went out in the first quarter, while they're getting hit, they're actually doing okay, and they had much higher pre-monies, which means they were probably better capitalized to weather the storm. So will private financings be hit in Q2? What will happen to the IPO markets for the balance of the year? Stay tuned, and we will get to that in the Q&A section. So lastly, I'll cover some brief observations for partnering and then get to the questions. So Q1 was interesting that it saw a shift from larger M&A to licensing deals. So the question is that a post-JPM year-end announcement hangover, or was something bigger at play even before the financial shock hit the system? We have not seen the mega deals that we have in prior years, and that's the driver of the values for M&A being lower. So we'll talk to that in a bit. Also thinking about Q2 and Q3 for licensees as a real source of capital. That's something that is becoming a real option, not just for private companies, but especially for public companies looking to raise capital non-dilutively. And we'll talk to the M&A markets about how companies are adjusting to potential lower valuations, and will that actually lead to more or potentially less M&A going forward. So we'll also briefly talk, this is probably something I'll address, about the numbers of small companies, public traded, even private venture backed, looking to actually do proactive buy-side screens and acquisitions in licenses. And we're starting to see some aggressiveness there, but also some pulling back of the reins. There's kind of a tale of two cities that we can get to as well if we have time. Not surprisingly, oncology remained the largest center of activity, but that's changing dramatically as clinical trials are getting delayed and people are pivoting a lot of their oncology-related developments into the COVID space. And interestingly, not surprisingly, of course, anti-infectives, which no one wanted to touch, have a renewed interest in light of the COVID world. So that is a trend that I think we'll be following as well. So hopefully that sets the stage for things, and we will dive into the questions. And I will ask my two soothsayers to comment. Maybe I'll start with Chris and then get to Barbara. I'm just curious about your outlook for de novo private financing activity in Q2 and the balance of the year. So go for it, Chris.
So thanks, Geoff, for having me. Thanks, Barbara, for participating. Welcome to week 5 of work from home. So when I think about de novo, e.g., new companies looking to go off and raise money rather than things that are in process from the first quarter or from the fourth quarter of last year, I think what we're seeing is that the investors are definitely open for business, but they're a lot more cautious as a result of some physical and then some metaphysical aspects. One being that, fund managers are forced to quarantine at home. And so they can't meet management teams, which is, some funds actually a prerequisite before they invest. So that's a challenge. I think based on what I've heard is that these guys looking at private deals are using the time to perform even more due diligence. And as those of you know who go through the process, the diligence is pretty extensive. And both it's in terms of the depth and the breadth, and also the time it takes. One challenge is obviously channel checks with doctors and payers, and those are very difficult to do these days as people are tied up appropriately dealing with COVID patients. I think also we're finding that, not surprisingly, funds are looking to triage their own portfolios and focus on which companies need cash when, and what those runways would be, and how you keep a few of those companies that might be struggling with less cash alive, and pumping more money into those rather than looking at new deals. I think something that we also believe is that if you can buy a public company on the cheap with liquidity, why wouldn't you do that as well? And you remember back, during the financial crisis of 2008 and 9, when I was on the buy side, and it was, I think the time frame they coined the concept of a VIPE, a venture investment in public entity, which is sort of a type that venture folks do, and that's still coming, I think, to be popular now. I would say that in any new process that that starts off is gonna probably at least be delayed, if not kind of stuck on hold for 1 to 3 months. So for people looking to raise money, we used to argue that this kind of a standard 6 months. I would plan on at least tacking on another 3 if you're going to have to raise money now.
So Barbara, what do you think? What does your crystal ball tell you about kind of Q2 private financings, rest of the year?
Yeah. So, I think in general, and we'll talk about this on IPOs and other things too, the shutdown is a huge problem, of course, but it comes at a better time than many of the other kind of cataclysmic events we've known, like in 2008 or back in the dot-com fiasco. But so it comes at a time when otherwise there's a ton of capital around. I mean, there are a lot of funds who reloaded. There are a lot of people who made great exits and are sitting there with cash. And so I agree with Chris that I think there's definitely going to be a delay. I think people are going to say, well, I'll do more diligence because I have time, and all of those things that might otherwise be foreshortened in a frothy, competitive market. I think it may be you'll get less competition for a given deal, and it'll be harder to build maybe separate syndicates. But from everything I hear, people are funding companies. People are still leaning in. I think things are definitely taking a bit longer. I think immuno-oncology is continuing to get a lot of good attention from very high quality funding institutions. And so for now, I think it's really hard because we don't know quite how long this is going to go on, and how the knock-on effects of not being able to generate data and not being able to be in the clinic for many is going to really hit. I think I'm cautiously optimistic, actually, about continuing to be able to get funded. For companies seeking funding, I definitely agree with Chris too, that I think there is a bit of staging going on at VC firms while they try to figure out who needs cash now, who's most sensitive, what value inflection points were they just about to get. I mean, there's a lot of companies who are hit very hard by the impact on their clinical development and ability to generate data that was going to be a value inflection point.
So I guess maybe to break that down, so public investors who are investing in the private markets, proverbial crossovers, do you see them reacting differently than traditional venture capitalists? And does that difference potentially make it easier, harder to raise capital, or how do you see that dynamic playing out? But Barbara, why don't you take that first?
Yeah, sure. I think, crossover investors have been a huge part of the whole IPO boom since 2014 has been going on, and I think they play a really critical role in the health of that market. I think if, depending where valuations are and where people are going out, if they're getting out, and whether or not it looks like there's really room, if you will, to make a discounted investment prior to the IPO, have a step up at the IPO, that's going to really affect whether the crossover investors really want to come in at that last venture round. It also is the fact that there's probably a lot of valuation hits happening in the public market where people may say, now I'm going to pivot, and although I'm a crossover fund and I do some private, some public, I'm going to just go and make hay while the sun shines now and look at all these public companies who need funding because I think I can get something at a very attractive valuation, and I'll come back to these private companies. They're going to be there anyway, and go and maybe work harder in the public arena.
Yeah, and it's liquid, right? So there's less
Yeah,
risk. You can always get out if you need.
course.
So might as well do that. Chris,
Yeah,
what do
and
you think?
take advantage of
Anything
the valuation.
Anything further to add there?
Yeah, so I think the phenomena, so piggybacking off of both what you guys said, so as Barbara pointed out, there are, so when I grew up as an investor, there were, 20 or 30 dedicated funds that matter, and that was a problem. The kind of concept of a crossover didn't exist. Private family office stuff was on sort of like hidden maps, like Houses of the Stars, and overseas money, didn't really exist in abundance. And so those are the new sources of capital that come in now. We can triage each of those independently. The idea of a crossover are traditional pools of public-oriented money that would come into a private deal in order to make an IPO happen so they could own something that was public, assuming that there were IPOs. And what made IPOs robust is a market where 401k and retail investors on top of institutions ran these things up. And so the big question then becomes, are there going to be any IPOs? And it's kind of hard to imagine, people struggling financially and millions unemployed, pumping money from their 401k into speculative IPOs. And so therefore, will there be crossovers? And so I think that personally, it's going to be a challenge to get past that robust kind of opportunistic pool of public money in these crossovers. I do think, however, that there are some people who are traditional public investors that decided to dedicate, what I learned recently, money to private deals. And there became almost like later stage venture capitalists.
Mm-hmm.
And those have long-term kind of views. And so when we did this webinar 2-3 weeks ago, I figured that whole market would shut down. What we're finding in reality is that's not true. That these guys are not saying we're out of the private business, we're focusing on public. They got a private fund and they're just doing more work. And people are looking very, very seriously at these $50, $75, $100 million private rounds now. So I think it's a little bit of a tale of two cities. I think you have to understand, where was the kind of the hot money that kind of got in opportunistically, because if I was going to roll into an IPO, that's probably going to be chilled. And where's kind of the dedicated money looking to life sciences? That may take longer, as we talked about before, but I think still exists.
So kind of a flight to quality is what it sounds like, and some of the more marginal things might not get financed as easily, but the good stuff will still get funded. Is that
right?
Is that fair?
I think it's fair.
Okay.
I think in down markets, it's always a flight to quality in every respect.
Well, that's interesting. I'm curious, Barbara, from your insight into this. I have a few friends that are actually starting to see some investors retrading on terms, where someone put in a term sheet and then they're pre-COVID, then they're revising their valuation as a result, and maybe even saying, well, now I want a co-investor or a co-lead. Have you or anyone in your financings practice seen any of that more difficult type discussions, or is that just anecdotal at this point?
I'm not surprised that that's happening. I haven't seen it in any widespread way or a way where people are really talking about it. I personally, I feel like every company is spending at the board level so much time talking about the CARES Act and the payroll protection program and whether to take or not to take, and so much around that some of these other points have taken a bit of a back seat. And I could certainly imagine that that's happening. I think it probably will happen a bit more. And I've seen that in partnering, but less so in financing personally. Interesting.
Well, that might be a wonderful segue to your views on kind of the partnering world, 2Q and beyond. Maybe you want to take a first stab, Barbara, since you led us there.
So I feel like, again, they would keep saying this tale of two cities kind of thing, right? The best of times, the worst of times. In our group, which is pretty expansive, there are either people working, literally day and night on COVID-19 related, vaccines, therapies, antibodies, diagnostic tests, ventilator equipment, refurbishment, you name it. And we probably have 100 different of kind of projects like that going on for over 100 clients, or other people waiting for that deal response you thought you were going to get a couple weeks ago, and everything just taking so much longer. Or that deal that really looked fantastic in early March, now all of a sudden, the partners pulled back entirely, and in some cases has said, hey, we're closed for business for a while, or has said, we're not doing this kind of thing. And so it's really bumpy. And I think absolutely people are maybe rethinking on the partnering side. On the other hand, some deals have continued and have been competitive, and I'm seeing, parties pile in, not moving as quickly as we might see. And I think taking more time to due diligence and other things that can be done more remotely. But definitely some deals really dying in the face of this. I think in part because the pharma partners basically have other uses of their capital right now that they may opportunistically want to be spending.
Interesting. So do you see that delaying the volume? Or is that mean to a reduction, or what do you think they'll?
Yeah, I mean, look at partnering. To me, and certainly in our group, it's always a year-end driven process. It's slow in Q1, it gets quicker, it steps up in Q2, it gets robust in Q3 for sure, and it's nuts in Q4. And that's, everybody's trying to get their deals done by end of the year, make their goals, go to JPM, et cetera. And so it's not surprising that Q1 is usually people are dating, getting to know one another, everyone's sort of waiting to see, and things get more serious usually in Q2 and definitely into Q3. So in some sense, I feel like we're following that pattern to some extent. These crazy busyness pockets are really caused by all the COVID-19 specific work. And I would say other deals are progressing. They're either canceled entirely and in part related to COVID-19. And again, maybe because somebody's going to come back to these in 6 months when they've done, something else they're focused on, COVID-19 related, or maybe acquisitions given what's anticipated to be lower valuations in the public market. But so I just think it's going to be really lumpy, even notwithstanding the cyclical nature of the partnering calendar.
Mm-hmm. So, Chris, what do you think? What's your view on where the strategic deal-making landscape is going to go the next couple of quarters?
So I think all vacations are canceled for the rest of the year, and I think what's going to happen on that topic is Barbara's right. I also think there's an add-on. So there's increased activity as everybody's looking both on the sell and the buy side to think about ways to tackle COVID, which we see a lot, and that's happening. But also what's happening is, the large companies have reasonable balance sheets, and as Barbara talked about, a lot of people raised a lot of money between Q4 and before COVID and Q1, and they're looking their chops about opportunities that we just talked about from financing perspective, people retrading deals that the buyers, the acquirers, the licensors are looking at maybe getting attractive prices on opportunities that they have. And the sellers are, we're talking about again, getting a little bit more nervous about, getting their private deal done. And we know from our own book of business that they're also looking at, potentially exploring sell sides. So I think that you got willing buyer, willing seller, plus the COVID activity, plus the uncertainty of the capital markets, that I think that there's going to see an uptick in activity around partnering through the rest of the year, which tends to happen when the capital markets get choppy anyway. But now you have this whole other area, which we're going to explore, I think, later in this conversation about COVID deal making. So I'm really optimistic about kind of the sell side and the buy side. And I think we're seeing it both, from companies looking to take their whatever bag of money and bring assets in and do screens, small and large, as well as those who are big saying, all right, it's time to, reprioritize our portfolio. Let's pitch a bunch of stuff out. So those are the 2 or 3 reasons why we see, I think, an uptick in deal making.
Got it. So we'll go to the COVID deal making next, but maybe this is a little bit self-serving, but you said something interesting, Chris, that vacations are canceled for the rest of the year. I'm wondering, Barbara, if you share that view, and does this mean that the typical summer lull, July, August, is not going to happen, and that people will be doing kind of makeup time because there wasn't as much happening March, April? What do you think, Barbara?
I think that's a great point. I hadn't even thought about it, Chris, till you said that, and I thought, wow, yeah, our usual European August off lull in deal making and some of these other things. I'm just not sure people are going to be able to afford that. I'm not completely convinced, because it may be, 2020 as a whole is just kind of a write-off, and people say, yeah, it's not going to matter, I can't make it up. It depends, I think, how extensive, and I really don't have a great feel for how extensive this sector is going to be hit by this. And but I definitely think people are going to think hard about that for sure, whether there's a vacation. One thing I also, oh, sorry, go ahead.
No, go for it. Please finish.
No, I was just going to say, to me, the biggest thing that impacts partnering, and this is regardless of whether we're having some kind of shutdown or economic depression as a result or recession, is the public markets. So if you can access capital in the public markets, then as a private company anyway, you feel comfortable about partnering, because it's often an alternative to partnering. It's often in support of partnering plus IPO. But if you feel you can't get an exit, and your investors don't feel they can get an exit on the public markets, and that window looks shut, and we've been through those long years of shut windows, then you're only going to sell, and you're only doing M&A, and you're not going to be partnering. On the other hand, public companies who are already public and already sort of committed to, if you will, an independent path, they've already partnered some or all of their assets, regional deals, all kinds of deals, they're going to continue to partner. So I do think you're going to have this bifurcation if it looks like the public offering market closes.
Yeah, so it's interesting
also,
on that. Go for it, Chris. Sorry.
No, I was going to piggyback on that, Barbara, as you mentioned that. So what we're seeing both on the public and the privates is they're saying, geez, I don't want to lay people off. Everything is slowed down. My experiments are slowed down. My clinical trials are slowed down. My cash runway, I'm really nervous. I have to reevaluate. You're guaranteed whatever cash you have is going to last you less time in terms of your runway, and so you don't want your plane to fall into the water. And so what they're saying, we're having people come to us and saying, hey, listen, I want to partner this asset. And we've even had these conversations. We've said, all right, well, in order to get the right amount of value, you got to run a process. They say, screw the process. I got one willing buyer. Let's just run down and get it. Jesus, if I can get $10 million up front, that keeps me alive for several more months. I said, wow, this is surreal. So we're getting pitched a lot of one-to-one negotiations where they don't even want to run a process defensively or offensively.
Yeah, it's just a financing vehicle.
It's a financing vehicle, right?
Yeah, pure and simple. So I definitely agree that people are thinking of partnering earlier or on less favorable terms or in a more foreshortened process than they were 6 weeks ago. Absolutely agree to that.
Yeah, so
and being a far greater pragmatism, in other words, being brought to bear on, what have I got? What can I hive off? What can I harvest for value? Yeah, I've got to make those choices between programs, people, how to stay afloat.
Yeah, and I'm sure you're seeing this, Barbara, as well, but we're seeing companies that we never would have thought coming to us asking for help on partnering, because usually people didn't want to partner because the capital was so cheap, raising a follow-on. And because stock prices are a little bit down, companies as big as $750 million, maybe even $1 billion in market cap, are considering at least ex-US partnerships, as well as global partnerships to help sell one or two assets, as opposed to diluting the hell out of these shareholders. Are you seeing
because look,
although
go ahead, Chris.
No. But so Geoff just mentioned something which is, flies in the face of something else he said. So one of the things that we are seeing, which is surprising, and Geoff pointed out to me, is that, we had a very robust business doing ex-US partnering. Everybody wanted to hold on to their rights. That business has slowed down a lot. And I couldn't figure out why until Geoff said, listen, if you're doing a Japanese deal, which usually takes a really long period of time, that doesn't scratch anybody's itch and they need something done in the next 3 months. And so they're looking to say, how do I get cash in this quarter or in 4 months, not in 9 months? And so maybe it's a little less ex-US unless it's kind of a one-to-one and you can move it quickly, but that's just an interesting observation that Geoff made the other day.
Yeah.
Well, you're seeing public companies, Barb, wanting to do more partnering to raise capital instead of follow-ons.
Yeah,
Is that fair?
I just to follow on your point, everything is dilutive. It's either asset dilutive or equity dilutive. Sure. And so I think you're just looking at that toggle between, do I raise, equity or we'll get to this maybe in some alternative things, debt, or do I partner? Maybe my, second best child.
Yeah. We love all of our children, I guess, but some more than others.
Yeah, that's right. That's right.
So just to moving on to where you were starting, and I think people have an interest in, and we talked about this a little bit in our last webinar, but thinking about COVID-19 partnering, I've seen some statistics that there's more than 70 vaccine candidates, more than 300 total therapeutics in development, and there's actually deals getting done. And you said that you have 100 clients working on this. I think Locust Walk has 5 or 6 or something like that. We're a little smaller than Cooley, but we're growing.
A little bigger, right?
But the point is that people are pivoting, and I'm curious how you're finding the receptivity to that, and are you seeing these deals happen, and what do you think about the strategic implications of that?
Gosh, so I do think a ton of this is about the pharma world, having a kind of unique opportunity to pivot from being part of the problem to part of the solution, and elevating the world's view of these companies as really important and critical to life on our planet in a healthy way. And so I have to think a large number of these are being driven by I don't want to belittle them by saying public relations, but absolutely in the common good, right? You're really trying to kind of give back. I don't think many really are going to involve, and I'm sure there are going to be interesting government issues around pricing on these when they come out, and whether we test some of the, I don't know, margin rights that the government has from government-sponsored, university inventions, to the extent any of those are tracking through to some of these prophylactics or therapeutics. And so I don't really know where it's all going to land. As a human in the middle of this pandemic, I desperately hope these things come to the fore and get approved quickly, and that we all are able to be tested, and that we're all able to feel like if we or our loved ones got sick, we could get effective treatments for that. But I really don't know what's going to happen to all these companies. And I don't think anyone's putting all their eggs in one basket by any stretch. And if they are, they're only doing it for a very short period of time. But I do know there are a lot of companies out there that we work with and others really trying to evaluate, like, do I stretch here? And there's a credible sort of case to be made for my product or my whatever to have an application here. Do we go for that and distract ourselves off what's already a tough path with delays? I think that calculus is happening everywhere.
Yeah, and look, you could spend money on black holes that you'll keep throwing money at a pit, and you won't create any value. And or is it worth making that pivot, or do you just stay the course? Some companies used to get bumps in their stock price for announcing a COVID therapy, and maybe that's not as pronounced anymore. So there's a lot of things to think about with that. I don't know, Chris, do you have any thoughts on whether companies should pivot, how, and how to think through that?
I always have thoughts.
I know you do.
That's what we love about you.
So I would say there's 4 things I think about, most of which are piggyback what Barbara said. Is one is we don't know how it's gonna play out. 2 is never in my lifetime have I ever seen so much of a public-private partnership. And every day when I watch all the government press conferences, they're sitting there talking about laboratories and all. It feels I'm confused as to whether they're actually for the public good or they're promoting the stock, to be honest, because the stocks all run up there as the public's talking about it. So there's clearly more than ever in the history of the government in the United States a relationship between the publics and the privates, which is bizarre, and that's where Barbara's question comes in. so there's the third part is there's definitely a huge PR piece to this, right? I mean, there are large pharmas that have pools of capital that want people are coming in and saying, Pfizer, what are you doing about COVID responsibility? And they have a fund, I'm sure they're going to give bits and pieces out to a bunch of companies without economic rights to say, we have 50 lines in the water right now, and one of them might hit, right? And so the challenge is going to be where Barbara's talking about, you haven't heard in a long time, if not ever, and I think Barbara's in my licensing career, and maybe yours, Geoff, about march-in rights and all the buy-dole stuff and all the stuff you think about, which is, well, the government financed this and you license it, and we can march it and use it. And you think, oh, yeah, never going to pay attention to it. What's going to happen is one of two things. It's clear, 100% guarantee, the private sector is going to solve this problem. Well, I'm not saying 100% they're going to solve it. The 100% is going to come from the private, not from the government sector. It's not going to be an NIH lab, highly likely it comes up. It's going to be Regeneron or Lilly or something private. So the good news is biotech is going to be the star at the end of this, right? Because they're going to discover the vaccines, they're going to discover the antibody tests and get them across. The downside is that biotech is then going to become the villain, because they're going to want to charge and make money for the efforts they put in, and the government, back to your march rights, is going to say, it's not the public good, and so now you're evil. So you're going to say, I was a hero on Monday, and now I'm the villain on Friday, which is bizarre, but I think that's where you're going, Barbara.
Yeah, I think you're spot on.
So Chris,
I think it's a fine line.
Then we shouldn't do it. Then we shouldn't invest in that if that's really what's going to happen, because you can't earn a return. The big companies can afford that, but a small biotech can't afford just to do something for the public good. They have to earn a return.
So pros and cons. Pros and cons. So one, as you pointed out, people like to pump out press releases with an ATM in place because people think they're going to, solve COVID-19, and the stock goes up and they raise money. I mean, that is what it is. Two, this is different, right? So this is the when I learned for the first time ever a couple of years ago about a monopoly and a monopsony, right? Monopsony is having only one buyer as opposed to one provider, and the government is a monopsonistic buyer. And so the good news is they're guaranteed to buy everything you make to treat COVID-19. The bad news is they can negotiate against you. And so we learned that during the post-anthrax attack biowarfare stuff, that a bunch of companies were created, and they thought, this is terrific. The FDA is going to VIP the process. Government's a guarantee, but I don't feel about pricing. Everybody needs it. Those companies were really unsuccessful. And that was because, no one ever gets concerned about getting anthrax anymore. The problem with COVID, as we talked about a couple of weeks ago, is that this is not going away anytime soon. My, 85 to 87-year-old in-laws, are never going to be able to leave their apartment unless and until there's a vaccine. That's a major problem. That's not going to happen this year. So making an investment this year for data next year is not actually a bad strategy, right? Yeah. Even if the government buys it. So that's a little different. This is a couple of year process. This is not an immediate threat like the anthrax. Yeah. And the challenge will become is how do you make money on it? No one knows. That's why I said Barbara says, I don't know how it's going to come out.
Yeah.
I do think there's an interesting and likely here to stay, whatever that means, focus on anti-infectives more broadly, though. I think this has probably shown a helpful light on the fact that pandemics happen. I mean, I've worked with a ton of flu companies over the years, right? And every one of them is always, the CEO or CMO of which is always worried greatly about a flu pandemic. And now we have, and at least with flu, you have some kind of a shot at a vaccine, depending how good you were at predicting what the strains were going to be. So I think I'd like to think there will be for companies who've long tried to do an anti-infective play and struggled, and there are so many. I really hope that becomes more of an investable, attractive sector.
Yeah, I think we all hope that. I think the question for investors, if I were putting myself in their shoes, is if you're going to skate to where the puck is going, you have to assume there's going to be a change in reimbursement and the regulations and hope that that's positive. But as of today, none of that's happened. Yeah. So you have to invest now, hoping that that will have a positive outcome, which, relying on the government to a major part of your investment thesis is hard. Although we are doing that with COVID, but that's a little bit different.
But look, we have a defense industry who have a single buyer too, and I mean, those people do make money.
True, but there's only 3 or 4 companies that sell to them. And same with biotech. There aren't that many companies that only do biodefense. because it's a very concentrated universe.
Yeah, agreed.
So maybe we should move on to other impacts. And,
Sure.
and one of the things that I think is on everyone's mind is clinical trial recruitment, which used to be something no one would think about, but now we're seeing lots of delays in trials. And that obviously causes an increase in cost on the G&A side. I'm curious if either of you have a perspective on that and what that means for how companies should be thinking about the path forward. So, Chris, do you want to take that first?
Yeah, so I think this might be the biggest underrepresented challenge biopharma's face.
Yeah.
This is a huge, if not existential threat that I haven't seen any articles on, no TV shows about, any other webinars that I've seen about. Look, at the end of the day, the way these things work is you're always waiting for data as a biopharma. And you know, that joke we tell all the time is that what the data partner needs to see in order to do a deal is whatever data you don't have. Well, so the problem is now you got this challenge because you can't run trials on anything. And even oncology, life and death stuff, it's a huge deal. They've canceled almost all the elective surgeries, most if not all. Enrollment's very, very difficult, if not impossible for these trials. So we have clients that said, hey, listen, we're expecting data, you know, in May, and can we start a partnering process in advance? And they've all called up and said, pass, we can't do it because we don't have the data. We can't do it in Indonesia. We can't do it in the US. We can't do it in China. There's no place to go. I think it's a huge problem. So what we said to them is, you're going to have to get really creative with your statistics, because if you have, 50 patients worth of data and you wanted 100, you may have to just stop, because I think the downside to halting your trial is you don't know when it's going to restart. Trials have sort of tints on them that stop and have to start again in the partnering world. I think Barbara would agree. And so that's a huge deal, because then you also have to think about your burn, right? Because you're about allocating $500,000, $1 million bucks, a month to go run your biopharma company, a bunch of which is fixed, assuming a certain ramp of patient enrollment, and that's not going to happen. So I imagine boards, Barbara, are sitting around going, holy cow, that's a giant, impact on our runway restriction. And so I think it's a huge problem.
I completely agree in the sense that there's no way to get your arms around it. You just don't really know. I think I am seeing, look, every company's trying to grapple with this. I've seen companies who've figured out how to pivot from, and again, this all depends on your indication, right, and your drug and how it's administered, but from administering where the patient had to go on site to the clinical site, et cetera, to home visits and hiring people who could go and do home visits and still nonetheless being able to do that as essentially an essential business. But I've seen that. I've seen some oncology trials continue on because basically these people are going to die if they don't get drug. And so they can die of COVID, or they can die of, their stage 4 XYZ cancer. And so some are continuing in a way that might surprise you. The other thing that happens, though, is even if you can do that, sometimes your manufacturer can't get you drug product because they're the ones having the delay, can't get people to come in to make product. And so there are a bunch of pinch points that can affect it, even if the trial sites themselves are shut down. So I don't think we have any sense of how long it's going to take to get those, where are you doing your trials? Is it both a European and a US trial? And so you can open in some places, but not others. How is that going to work? What's the ultimate effect? How long is it going to take? And absolutely, these are critical to getting more capital, is being able to present that data, whether it's to do partnering or to do a financing. And I think it's absolutely the biggest risk.
Interesting. So it's crazy that two of the most impacted states for biotech that are likely to take the longest to reopen are actually Massachusetts and California. And that's where some of the biggest medical centers are. Of course, there are plenty of other big and reputable ones as well. So there's definitely uncertainty in that. Although I did speak with a European biotech that was going to start their oncology trial in San Francisco, and instead they've pulled it back over to Europe. And his comment to me was interesting, is that, well, you guys still have your wave coming, or it's cresting, but in Europe it's already hopefully behind us, and they're actually thinking about being able to start trials quicker in Europe than the U.S. So I don't know if
Yeah,
that's
I know. Isn't
helpful
that
to anyone. I
ironic?
thought that was an interesting perspective.
Yeah.
Sure is.
So I guess, you know, a few other things relative to getting back to kind of core deal making. You know, Chris, there's some in our report we had some really encouraging data out of China, and ironically, since the virus originated there, but they're the ones that are I think frankly holding up pretty well. I'm curious if you have any thoughts about how China plays a role in biopharma partnering, but also financing going forward, and how does that impact the U.S. and Europe?
So I would say this is one of the biggest surprises for me, Geoff. So I won't take a political side here and claim that that China was the origin of the coronavirus, but I will take a stake that it's pretty clearly seemed to have bounced back before many other countries, including us. I've been shocked to see how quick the uptick has been in both the Chinese investor and partnering interest. It's far ahead of the U.S. Look, China was an emerging player in terms of transactions before this happened. And so I expect this increased activity to be part of the sort of new normal. I know, you know, it's probably worth even you talking about, Geoff, that Locust Walk, you know, recently completed a deal where we've led and consisted almost extensively of Chinese investment groups, and that in fact we've always looked at China as an interesting source of capital, and have recently, you know, engaged someone to help us specifically do it. So I would have thought, you know, given the decimation that they faced, that this would have taken a long time to bounce back. And in fact, I'm shocked, really shocked, more than just surprised at how much interest still exists. And in fact, might be a saving grace for companies seeking private capital, given the challenges in the U.S. that we just talked about at the beginning.
Barbara, what do you think?
Yeah, I agree. We do a lot of China-related deals, whether we're representing kind of U.S. companies out licensing to China-based entities, or China-based entities trying to in-license from U.S. and elsewhere. And I've been astounded at. It doesn't seem like they've missed a beat, Chris. And I think they're taking advantage of a kind of unique opportunity to come in and, you know, see the point above about people partnering off maybe earlier than they were thinking they would 2 months ago. And they tend to move pretty fast. I'd say by and large, they can move pretty fast. And I think there's a real window where a lot of these China companies are able to access assets that are very attractive to them, later stage clinical assets, in a way that's a real win-win for both companies, honestly, in the current market. So I think it's great. I think it creates a great alternative for a lot of companies.
I mean, I'll put the questions back to you, Geoff, because you're living in that world even more than I am, with a bunch of Chinese transactions. You see how robust these are going on, both in the investing and partnering side, right?
Yeah, I mean, we're working on a JV for China that, you know, they also came in or are coming in on a financing. There's another financing we're working on that has a real Asian component, and it's more than just China. There's Greater China and other parts of Southeast Asia. But I think in general, that whole region of the world, there's so much capital. This comes back to what Barbara said, that even in the U.S., there's real capital available. The question is who's willing to deploy it and under what speed. And if they're further ahead of us on the comeback, then it wouldn't surprise me to see them take advantage of perhaps distressed opportunities or companies that are a little more desperate. So that doesn't surprise me at all.
Yeah.
So one thing I had on my mind that's, again, shifting gears a bit, but getting kind of prospective partnering, financing situations in a social distance world. I know all of us have attended many a partnering or investor conference in our day, including even this year. JP Morgan is, of course, the biggest one, and bio is coming up, Bio Digital, no longer Bio International. So I guess I'm curious, how do you guys think the absence of in-person partnering / investor conference affect interest in deal making, and will that change, you know, the human dynamic? Will that change the deal process at all? Barbara, do you want to start there?
Yeah, this is a high touch business, right? People really, really value meeting on the partnering, anything negotiated sort of side. I think people really value meeting in person. You do a partnering deal, you may end with a bunch of teleconferences, but you are beginning with that several days where you're sitting down and looking eye to eye to one another and really trying to build rapport and get the measure of the party on the other side. And um and I've been doing this for a long time, and I felt that my whole career. Now I do think people are adapting to a little bit different way of doing business, and to have a Zoom negotiation, which is not something you typically do. You're either on a call or you're on the person, and people coping pretty well, and people, I think, adapting surprisingly well. And I'm a half glass full type anyway, so I'd like to think that it's hardly ideal, and people will be delighted when they can meet in person. But I also think they're going to find there's some real efficiencies to not traveling all over the world constantly, and that if I can get this done pretty darn well, uh, virtually, and even I'd argue in some cases, we've been talking about it in our group, people come a little more prepared to the negotiation because they know they're going to be on this call, and they're trying to take advantage of their time. And I would say it's almost a little more efficient, potentially, even if not as, I don't know, you don't get the full sensory experience. So I think it's kind of details to follow on that, but I'm a bit optimistic that that isn't going to get in the way.
Interesting. Chris, what do you think?
So surprisingly, Geoff, I don't think that this has had that much of an effect on deal making. I think, with technology the way it is, folks are still amazingly productive. And I think this is like online schooling for your kids. It took a while, but now they're kind of used to it. And although they miss the personal interaction, they're getting pretty good at the sort of new normal. So I actually, if I'm going to go out on a limb, I don't think there'll be any in-person conferences this year. I think that, the efficacy of the process will fundamentally change the way we do business. And I'm not suggesting the conference business is dead, but I do think that the BD and the investing process is going to be revolutionized by the positive feedback folks are receiving during this kind of stay-at-home process. And I think one of the things that even we've learned internally is that the amount of money we were spending on traveling, going to conferences is insane. And if you can reduce that and still be efficacious and get stuff done, it's an enormous value driver. And so, I think last year I flew 150,000 miles, not to mention the time that I was away. And honestly, I'm probably more productive in the past 5 weeks sitting at home talking to everybody, and there are other pros, right? So we were talking about this the other day, is that in your effort to communicate with your partners and your employees and your clients, you over communicate during challenging times. So even as a firm, we used to talk once a quarter. Now we talk every single week, and it's twice a week. Everybody sees each other, and it's one place, and no one cares that you're in Boston or Japan or Europe. Everybody's all, equal kind of on a Zoom, and there's no dress code, and everybody's much more relaxed. So we're all talking far more, and it reminds me a little bit of kind of post 9/11 when you call up even your worst enemies and say, listen, man, let's bury the hatchet. That was terrible. We're all on the same side. Let's just make up. I want to make sure you're okay. And you're like, wow. Right after that, went back and we were really mean to each other again. So these type of things bring people together. I think the efficiency, and there was a deal that I was working on where they said, well, you're one of a couple of parties, and you're going to have to fly to Europe on your own expense and take 2 or 3 days to come pitch. And we had a really tough time internally saying, would I spend the $30,000 for 2 people to go over for 50% chance of getting it? Turned out it didn't happen. We had to do it all via Zoom, and we're still getting the project, but we saved $30,000. And you're like, Jesus Christ, why would I ever do that again if I didn't have a choice? So that's the flip side.
Yeah. It's not just the travel costs, which are extensive, especially across any given ocean, but it's the time, right? And so I think we had reached this point where I'd like to say, deals have become twice as complex and are expected to be done in half the time as like a few years ago. And your sense sometimes is that everybody's working at warp speed, and people, who's reading these things? Like, is anybody really kind of paying attention to the detail? And now when you're forced to sort of stay in place, the time you used to be spending, in airports, over here on a conference call, whatever you were doing, you're able to focus, I think, a little bit more on what you're really trying to do. And so I do think there's a real efficiency and effectiveness of having that extra time that I think that's going to stick, at least to some
So I was thinking
extent.
about it. No, I was thinking about it. How many times did you have to sit in conference calls with people and they're like, hold on a second, I'm going to put my headset through security and I'll come
Yep.
by and get the other
Right.
time. Now when you
Exactly.
say to people, hey, can you talk this week? And used to be like, well, let me check. I might be in, let me look out the window. No, I'll be here. So it's
Yeah.
amazing because no one has anywhere to go except just to do the business all the time. So it's really efficient.
Yeah, there's definitely downsides
That
to that.
creates
Where do
other
you draw the line
challenges,
between
but
the two?
yeah, because at some point
Because
you
I
do
wouldn't
have to
mind
be
going
like
on a
not
trip, right?
working, but yeah.
Yeah, a little
Right.
travel wouldn't be the worst thing in the world right now, but I'm sure
Right.
everyone on this call probably would think that. Well, so look, that's a nice positive externality from this is that ironically, the Zooms of the world who thought that, they would change the way businesses communicated, this actually is having that
Really
impact.
happening. Right.
So
Right.
it's happening. I think one of the other positives is I know there was a culture, and at least that I've been exposed to for most of my career about email. Everyone would email things, and I think now that we can't meet in person, there's a lot more phone interactions, which I
Mm-hmm.
view as a positive. And if you can't grab a drink with someone, you can maybe have a virtual drink, or you can
Yep.
at least call them up and see how they're doing. And I find that I'm staying in touch with more people as a result of that, and that actually helps to get more stuff done.
Yeah. Totally agreed.
So I guess the one, back to the business side of that, Barbara, just briefly, I mean, negotiations, contract negotiations over the phone are a lot harder than in person, but it's certainly doable. Has that had an impact at all in your view or not?
Well, like I was saying a few minutes ago, I think people, well, if people wanted, given that everyone's now very Zoom fluent, I see most people as doing them over Zoom. There are the occasional parties who might say, no, we just want to have a conference call. And now that feels archaic to me. You've got like 12 different people and you can't really tell. And when you have Zoom, even if someone doesn't show their video, at least you can kind of see who's what, where, and who's speaking. And I think it's maybe less ideal than being in person and getting all that input, but I think they can be made to work pretty well. The hard part is when you have something like a whiteboard experience. Like in a lot of deals, you're still really working through what's the structure, and you want to be able to kind of whiteboard some things. And so, I wouldn't say I'm expert at sharing my screen where I'm also writing or trying to create images at the same time. I mean, it's nothing like having a whiteboard, but if you're in a document and you're really at that level, then I think it can work pretty well.
Well, I will say that we had every intention of having the last and this webinar with video, and alas, there always are issues, and for whatever reason, we couldn't get it working. So we had every intention of everyone see us, but
Next
alas,
time.
just audio. Next time, yes, absolutely. So we're almost out of time. So I guess I always like to end on a positive note. So Chris, if you have any kind of positive takeaways or things that cause you to be hopeful that you haven't already shared, would love to hear it, and then you, Barbara.
Yeah, so I'm super optimistic for the biopharma sector. I think that if you look over the past 5 or 6 years, as the economy was robust, that biopharma was really getting set up to be the whipping boy, and everybody was worried, about the political issue. And if you remember, there's not going to be any IPOs, and financings are going to be shut down between May and November because they're worried about political uncertainty. I think this is a really interesting opportunity for the sector to shine and show its value. I think when you take, beaten down things like anti-infectives and realize that we actually need them, this is a turning point for them. I think, as my brother pointed out, in the last time we did this, when people were excited to leave college and go work at cool tech companies in the Bay Area, soon they're going to say, I want to go work at a cool biotech because it really saves people's lives and has an impact. So this is the time for the industry to shine. I think there will be a lot of business getting done. I think there is still a lot of capital around there, and you got to rise above the noise. And I think that, while staying at home is frustrating, people have found a way to make it effective. So I'm real optimistic for the rest of the year.
Cool. Barbara, any final positive thoughts?
I share that optimism. I also think at the individual kind of company level, I think this has been a real time for, like you say, for companies to get closer to their own employees, for teams to get even closer, for people to talk more than they used to email, to see each other more than they used to just do a simple phone call. And I also think for companies to be even more focused on their strategy and how they're doing things and using this time effectively as a kind of interesting hiatus in their business to be thoughtful. And so I think that companies are going to emerge stronger. I think they're going to emerge more coordinated and more clear in their vision of what they're trying to do. And I think we're all going to be the beneficiaries of that.
Awesome. Well, Chris, Barbara, I really appreciate both of you guys joining. We're out of time now. Thanks to everyone else on the line for coming on. As a reminder, the recording will be posted on our website, and we'll also send an email to everyone who participated in case you wanted to hear a replay. We'll also do our best to answer everyone's questions in writing. We tried to get to some of them, but there's still more that we'll address in writing. So everyone, please continue to stay safe, social distance, and do the great work that we all do. So thanks so much and have a great day.
Thank you, Geoff.
Take care.
Bye.
Okay.